Going well. Thanks, Scott.
Good.
Hello, Andy.
Hello, Steve. Hello, Scott.
All right. All right. So unless nobody's complaining, everybody's seeing and hearing okay. So let's get started. Thanks for showing up for the trade of the week. Some of you may recall last week we had technical difficulties and we were unable to discuss the Trade of the Week webinar. So we'll fill in a little bit of content that might have been dropped in from last week and include it with this week. But nonetheless, here we are on March 21st. Just a quick reminder, we are content publishers. We're going to show you some cool technology. We're a software as a service provider. What we are not is registered advisors or Series 7, 53, or 64 brokers to help you with your personal finances. So if you're looking for personal financial advice, please seek out a registered investment advisor because that's not what we're doing here. We're just going to demonstrate a few trading ideas and some cool technology as well. So we got that out of the way. All right. I think everybody still got decent sound. Hopefully that one person, AI or AJ, is doing okay. Disclaimer, we just finished that. Trade of the week. You are not alone with trade ideas. This slide I mentioned on just about every week because it is so important. We've got 4 webinars a week, Monday, Tuesday, Wednesday, Thursday. They all start at 5 p.m. Eastern, and we've mixed them up with different crews and different guys riding shotguns, so you never really have the same 2 guys at the same time, which is nice because it can give you some different color throughout the week, whether it's Brad and Dan working on something or Jamie and Andy or Andy and myself. We've got some good content Monday through Thursday, and then Friday we are now recording our web podcast. I believe we're up to number 12 or 13, so we're starting to get a lot of those podcasts in the can. And then Scott will talk to you at the end of this webinar and show you how you can subscribe and get notification of the podcast. The other thing is the live trading room. This is the slide you're looking at here. This is what we use for our live trading room with Barry Anderson, who is one of a kind, somebody that can juggle many balls, trade his own account, answer questions, moderate the room, keep the riffraff out, and still help people in real time, especially with trading ideas and also trade ideas, software, technology problems. You'll notice there's a little technical support tab down here. A lot of times we will tell newer traders, go ahead and pop into the new live trading room and use that technical support forum. And you'll have people that will jump in there and help you. Somebody's saying no audio 57 times. I'm sorry, but we do have audio, so he probably can't hear me. Still no audio. I'll respond back. Okay. We have audio. Okay. All right. Lastly, we have the one-on-one training sessions. Okay, the one-on-one training sessions is really like a $99 value. We offer it free when somebody is first signing up for the month. And, you know, if you're kicking the tires and you're thinking about maybe trying 1 month worth of trade ideas, you know, Scott's going to give you a really nice promo code at the end here to save some money for the first month. And then when you consider the fact that the one-on-one training is custom to just you and us, we're sharing a desktop and speaking to only you, it's not a crowd, we can go through exactly the type of help you need and help get you going in the right direction to suit the type of style of trading you're looking for. It's a great value. You know, after it's happened once, we charge you $99 for every other subsequent hour. So it's a valuable way to kick off the first month, and after 30 days, after all of this that I've just shown you, if you still think the program's not for you, then, you know, maybe it's not, but at least you gave it, I think, a real fair shake. Subscriber growth at Trade Ideas continues to move higher. This is about the area I joined as we started to break out. If you look at this as a stock, we're kind of breaking out of this long business-to-business relationship we had with E-Trade, Scott Trade, eSignal, and a couple other groups, and the focus really started moving back towards business to consumer. And right about here is where you see Holly, the AI, joined our suite of products. And this, again, this chart should be updated because I think this orange line should probably be near the top because we are just growing leaps and bounds the last couple of months, and very pleased Very pleased to do it. All right, logged out and back in, and now you've got sound. All right, AI, way to go. Troubleshooting at its best. Okay, I wanted to not skip through this one. We've got something new, and it's more for intermediate advanced users, but I'll just kind of touch on this slide. It's called Brokerage Plus, and it's going to be only for Interactive Brokers users. And right now, if you're running the 4.0.122 beta, there is a pro, and if you're also a premium subscriber, you actually have the ability to participate if you care, if you want to, in our beta program, probably for another 2 months as we hook up the Trade Ideas alerts. These are the custom alerts that you guys come up with, or the alerts that we share. And I'll just answer the question right now. Holly, the AI, is not connected to Interactive Brokers. So that stays in-house, that stays proprietary, and then we're doing some other things behind the scenes with some hedge funds. But Brokerage Plus for IB is a really cool new feature, and it's free right now. And if you join, you'll be part of the grandfathered group to help us continue to beta test this thing. But for those that are interested and have an Interactive Brokerage account, this is a new possibility. It's a new reality, I should say, where you can basically take any alert that you have and set up your risk parameters ahead of time. I only want to trade 100 shares. I don't want to lose more than $50. And I only want to hold it for three hours, or however you want to set it, but you can set it and forget it. And the Trade Ideas Brokerage Plus for IB is going to be a pretty cool tool when it comes out of beta here in a couple of weeks. It's not available through Scott Trade Elite yet. It's only Interactive Brokers. We don't know who the next trading platform will be. I don't even want to speculate, but we want to get it right the first time, and that's what we're doing with IB. All right, so here we go. Interesting day in the market. This is not going to be one of the usual same old days that we've been kind of having as we creep this market higher. So we're going to spend a little bit of time on what happened today in the market recap. Obviously some interesting stuff happened today. Holly recap, very quiet. That speaks for itself. The trade of the week, I'm going to talk about last week's trade of the week and also the current trade of the week. And I'm going to tie it together because we're using the same scan for both of them. And I'll touch a little bit more on why we kind of made that decision as we get closer to that. The winds could be changing, and if they are changing, we want to kind of give you guys a heads up on maybe how to flip some alerts and how to start maybe retooling for a possible down market. Because if you're a new trader and you've been trading for just a year, you've really only seen one side of the coin. There's an uglier, nastier side of the coin that kind of showed its head today, and so we want to maybe prepare for a couple of possible scans going forward if the selling does not abate. And lastly, we'll take a couple of chart requests, so maybe think of one, no more than two. Definitely no more than two of charts that maybe you want to look at. Today could be interesting because there's a lot of broken charts out there. I don't know how much value we'll be able to give, but maybe we can give you a little bit of insight into some of the charts that you're looking at out there. Or if you had a basic feature request, Steve, Andy, how do I create a filter that shows me a stock it went one tick or 1% above yesterday's high or low? Now, I'm just using that as an example, of course, but if you've got some basic features or a chart request, we're going to save that for the end because I think we'll probably have 10 minutes or so to mess around with that. And people do seem to like the chart request portion of the presentation. So let's minimize this guy, and let's go right into the market recap, which we always do. And you guys probably noticed something a little different today. I've taken away a few of the lines that we've had. I'm going to try and clean this up a little bit. I've made sure to add the trend line that Andy pointed out, I believe it was a couple weeks ago or maybe even less. We've added that trend line. But the focal point was really on these lines, and I'm talking to a lot of you. Hopefully you were in yesterday's webinar with myself and Jamie. Because we talked a lot about some of the signs that were showing up before this red-hot poker showed up on a lot of charts today. We looked at this breakout line, and both SPYs, Qs, and Diamonds all pretty much had their breakout line, and they would attempt to pull back and try and trade below and couldn't do it, and they'd bounce back up, and we'd get that 3 o'clock, that 3:30 buyer. that we had forever and ever and ever. That afternoon buyer shows up. Well, what do you know? Today that buyer didn't show up. And on the heels of yesterday closing just barely above that breakout line, we have now a broken chart. And just like I said, all bets are off if the price comes back down and closes below these lines, and we definitely got to close below this line. But I wanted to thank you for Andy for reminding me this trend line is coming up pretty soon here on the SPY. We also have a 50-day moving average, which is kind of in this same area, which could be showing up here pretty soon. But what I want to talk about today is don't be the knife catcher, okay? Everything broke today. It just broke. All right, and a lot of the traders that I respect and talk to out there, I try to retweet a couple of their tweets, and they're basically saying the same thing. Look, we don't know what happened today, but we know something happened. Now, if you want to jump in and be a hero tomorrow, that's at your own peril. But chances are, what if you didn't see the market today and you're fully invested in this market and you came home from work tonight and you saw this? Oh boy. What are you going to do? You're going to start putting in some sell orders tomorrow? I wouldn't be surprised to see if we see some overnight follow through in the futures and maybe even a gap down on our market tomorrow. Now, that could cut both ways. A lot of times a gap down after a big rundown in this market has proven to be a decent buying opportunity. So that has happened in the recent 6-9 months. We've seen this kind of a big down day with a gap down. So the real key is going to be in the first 2 hours tomorrow. Are the buyers going to show up, and are they going to defend this market? But basically, we can go one of two ways. I mean, we essentially broke some key levels of support here today, and we did some damage. And one day is not going to work itself out. So my advice is to really sit back, watch the market, see if the bidders show up, see if the bears decide to get more aggressive. This is going to take a few days to work itself out, guys. A lot of the good traders, the swing traders especially, like HCPG and even Brian Shannon and some of my other friends, they're basically going to wait for a few days and see how this shapes up. It's just a bit too early. Let's take a look at the Qs. Same thing. There's that line that we had to stay above. We stayed above 1, 2, 3, 4 days. We discussed in yesterday's webinar, and all bets were off today with a gap up and then just a slam. I'm hoping a few of you are here today that were here yesterday because I pulled something out that I really don't talk a lot about, but I'm going to do it again. I'm going to bring in this other chart which has stochastics. And what I want to show you is what I called out on the Qs yesterday, and it's called bearish divergence. And you use the price action alongside with stochastics. So I'm going to really accentuate these stochastics here so we can see them. Let's look at price point number 1. Let's go ahead and mark this up. Here's price point number 1, where it made a new high in the Qs. Okay, no harm, no foul. Really nice overbought condition right here. Price point number 2 in the Qs moved actually higher. What happened to our stochastics? They wanted no part of it. They moved lower. And then the third high peak that we just recently had in the last couple of days is just a couple of days ago back here in the Qs. Higher price in price, but a lower high in stochastics. This is basically showing you it's running out of steam. It's running out of oomph. Yeah, the price is going higher, but the stochastics are showing us it's doing it with less and less vigor and oomph. So that's, an indicator that some people like to use. It's not a very common indicator. They don't show up very often, but when they do and you start to see those things, those were some of the caution flags that I did throw up yesterday, and I said, I really think we got to keep this market tight because this market might be starting to throw them some red flags. Speaking of the IWM, which I said could not get above its recent high, and if it could, maybe it would spark another a leg higher for the market as another sector throws its hat in the ring for some rotation to compete. But it didn't. Not only did it not, this sucker was down 2.7% today. The Qs, the spiders, and the diamonds, they were down maybe 1.3, 1.4, but You know, I got to tell you, the IWM was just definitely showing its weak hand. It never wanted to participate along with the trend line that we had in the Qs, the trend line we had in the diamond spiders and in the diamonds. The IWM was just a lagging indicator, and so it's not surprising that it was down almost double. Not only that, it's actually threatening this this level of support here. So once again, charts are broken, and I'm sure we'll take a look at a few later in the hour. But don't try to be a hero. This is where the axiom, don't try to catch a falling knife comes into play. We just had a major event today, turned on a dime. The sellers got control. They may try and really put their foot on the gas tomorrow. But let's give this market a couple days and see how things sort out, because what we've got is just a red-hot poker across the board in all of our major indexes. Unique day, would you say, Andy? What do you want to add? Anything?
Yes, yeah, very unique day, and yeah, right there. And I want to point this out because if you would bring that back out, Steve, I wanted to show something on the bigger chart there in that IWM. If you
Sure.
could expand that back for me. There you go. A move like this many times could be the start of something more longer and extended move toward the downside. A good example is if you go back, maybe zoom in like you were, Steve, a little bit on the IWM. Yeah, zoom in a little bit. Yeah, going back, see that big green candle that started the move back in November there? Yeah, well, there you go. And look what's transpired after that. Look at the move. So, yeah, to reiterate what Steve said earlier, don't be in such a big hurry. It's just it could be. I'm not saying it is because we're still obviously in a bull market. 1.5, well, much bigger move, 2.5, I guess, in the IWM. It's a big move, but nothing major has been broken as far as the technicals go. But it could be the start of something. Just keep that in the back of your mind because pretty decent volume today, especially in the IWM there. And I mentioned a few weeks ago that IWM. I said be careful if this trend breaks, and it did today because it closed below its trend line going back to the first of December there. You could see the other one sell off. Yep, there you go. You don't need to draw it, but Steve's kind of showing it there for you. And it closed below that trend line. So yeah, we could definitely see some follow through. So I don't
look at
see
it this way. One of the rules Andy and I had when we were trading our live mirrored account at Ditto Trade was if we found ourselves or if we were watching a stock, even worse. Well, you could cut both ways. Let's use the analogy of you see a stock that you really like, but it's just got the crap beat out of it with earnings, all right? We used to have what we call the 3-day rule. Anytime we didn't wait 3 days before we bought that dip, it didn't work. So my point is, look at what happened in the market today, kind of like the market just missed earnings, all right? And when the stock misses earnings, they don't go down one day and then turn on a dime. They go down one day and then everybody, oh shit, what just happened? Oh my God, get me out, get me out. And then the stragglers get out and people on the fence, they find. So it takes 3 or 4 days for these things to really work themselves out. So treat the break in the market that we just had like a stock missing earnings. And going back to the rule that we had, we would never try and pick up a long stock after it got beat up after earnings without waiting at least 3 days to work out all the latecomers and all the people that are on the fence and couldn't decide what they wanted to do. So I just wanted to make that analogy perfectly clear. Turn my crosshairs back on. So yeah, it's just like the market missed its earnings. You don't jump back in there the very next day. You wait and see what happens. Okay.
We've had a huge move. I mean, gosh, this is nothing compared to the move we've had since the election. So it's like, yeah, this could be a deep breath.
Yeah, and you know what? And in all honesty, guys, we needed this. This is like a rainstorm. We need a watershed. We need a rainstorm to reset things, wash out the weak hands, wash out the people that are over-leveraged, and build a new base camp, hopefully for the bulls, and move higher. But in the meantime, we're in for some volatility and craziness, which is a perfect segue into why the heck did Holly not do anything today? Because of what you saw in the market, a statistical, noisy day of not being able to figure out what was going on, what was coming and going. There was a lot of volatility, a ton of noise. So if we notice, our handy-dandy AI Holly here on Pacific Coast time, 6:57, which is 9:57 East and 10:02 East. We had two trades come out to the long side. They worked for a moment, and then the market got a hold of them and slammed them. One of them took a profit save, the other one took a loss. And then it wasn't until a few 3-4 hours later, the AI tried again with another long, and that was it. 3 trades for a total trade count is something that we have not seen in months. And so I'll go back to the old axiom, Holly's kind of the canary in the coal mine. And if the canary in the coal mine's not singing a tune or not feeling real well, that really should give us a bit of an idea and an extra data point to look after. And say, well, geez, maybe, if the AI can't figure out, even how to trigger some of these stocks, that it's all set and cocked and ready to go, then maybe we as humans should be sitting on our hands as well. So we like to use that analogy a lot. Sometimes Jamie or Dan will say, we live in California. You look out there and the waves, and Holly's out there surfing, just getting absolutely crushed because the waves are 3 feet, 3 times over the head, and we don't have to participate. There's no law that says we have to, but the AI is going to swing the bat every single day if it sees an opportunity. And today it did not see any opportunity, so risk off certainly was the order of the day, just being very careful, because for the remainder of the day we all saw what happened, just a tremendous bleed off. Anything you want to add?
Yeah. This is something that stood out to me because some of you may ask, well, it should have been some opportunity to the downside, and you are correct. If you were a bear today, there was a lot of opportunity, especially in the financials. But remember what Holly does. She takes all this data going back, for basically 60 days, and she optimizes it, analyzes it, back tests it over and over and over. Well, the momentum shorts have not been working. So look at Holly's 3 short strategies that were in play today. They were all fading strategies. Knocking on resistance, a fading strategy. Putting on the brakes, a fading strategy. Topping formation, obviously a fading strategy. So none of those set up for her today because we had a market that opened and just shot straight down. So that's why none of those shorts triggered, because up until today there hasn't really been any extended momentum to the downside.
Right. So, Holly's going to have an interesting night tonight.
Yes, she is.
There's a whole new quagmire in the mix, but coming into tonight, it was just a lot of the same. The downside short momentum. Bond Shorty is a name you guys have probably seen. That's a downside momentum chaser. Wait for the 8. Wait for the 8. That can be a downside momentum chaser. So great point, Leon. I want to give Leon Kaufman here, props for saying exactly what Andy said before he even said it. Yeah, the 3 short strats up there, they all required some sort of upward movement first to jump in front and fade and do a contrarian entry. We never had a moment today to even think about those. So great observation, Leon, and thanks for explaining that, Andy. Yeah, there's shorts on here, but they were not downside momentum shorts. So again, the canary in the coal mine, a very quiet day for Miss Holly, and we'll chalk it up as such. Wouldn't be surprised to maybe see some momentum shorts on the board tomorrow. I'd really hope to possibly see that. We shall see. Okay, let's move on to the trade of the week. I'm going to start with last week. And this also dovetails exactly what we were talking about, guys. Okay, so let's go back to the last trade of the week for a week and a half ago. We were back here in the market. Andy and I were saying the same thing. Gosh, we really feel overbought. But you know what, guys? The market can remain overbought longer than you can remain solvent. So the last thing, and trust me, it's a complete rookie move to go in there and say, these stochastics are overbought. It's time for the market to go down just because you think so. And the market says, well, we don't care what you think. We're just going to continue to go higher. But in that respect, each week trying to curate some of the technology we pull from these scanners, the last thing we wanted to do probably was bring up maybe my squeeze me alert and look for a stock that's trying to go to 52-week highs on short float. Because if it didn't work, then you were going to see a pattern like we see in the SPY. This is what happens when the overbought stuff starts to really, really crash. And so we didn't necessarily want to find a stock on our Trade Ideas technology and then get on our small group and powwow about it and curate the final trade of the week when the market, to all of us, felt really overbought. So what did we do? We said, well, let's try and go in and find an oversold entry. So I worked on a new, I've got a new alert I've worked on. It's called oversold, and as it were, the oversold actually gave us the trade of the week last week, which is GDXJ, and also gave us the trade of the week this week, which is still in play. Matter of fact, look at that, it's still on the actual top list, CF. But starting with GDXJ, again, we felt that this was something, when I ran this scan over the weekend, GDXJ was just hands above everything else. Let's look under the hood here real quick, because I've added something, and I'm going to be talking more about it in the future. Maybe some of you have heard me talk about my good friend Brian Shannon, who is Alpha Trends on Twitter. He's an excellent, excellent teacher, educator, and one of the staples of his methodology is using what he calls the 5-day moving average. And the way he computes it is as follows. We like to use it on a 15-minute chart. So how many 15-minute bars would be in a 5-day time period? Well, there's 6.5 hours in each trading day, and I'll just save you guys the math. There's 130 15-minute candles in a 5-day period. So what we do is we call it the 130. We created a filter that's using 5-minute candles and averaging the trailing 130 candles of that particular filter. And that's basically what Brian Shannon calls, and I'll give him credit all day long for it, the 5-day average. And so what I've got here is a couple things. Position and 20-day range. This is where we get our oversold category. Oversold meaning 20-day range, 0 is the 20-day low, and 100 would be a 20-day breakout. Well, we're suppressing it. We're using the maximum column to suppress and stop at 20 and say, look, we want to see stuff that's beat up on a 20-day range, but no more than 20 percentile points above that actual low. So that's the oversold component of that particular scan. However, I want the change from the 130 period, the handy-dandy 5-day moving average, I want that to be a positive value. So in other words, I'm not interested in anything that's beat up over 20 days that's still trading under their 5-day moving average. I'm interested in things that have been beat up on the 20-day, that are very oversold, but have sprung back nicely and have settled in and are back trading above their 5-day moving average. That's really the nuts and bolts of this particular scan, aside from the price, and the relative volume needs to be at least a value of 1. Daily average volume is 100,000 shares, but typically it's going to show up a lot more when these things are in motion. So that is a way in which we said, let's not try and go for some overbought trade of the week that we could pick. Let's try and really curate something here that can work for a safe entry. Now, here is what it looked like. Bam, 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 down. And we had this one candle right here. This was the Friday going into the week. So we had a really nice green candle after a huge sell-off on the GDXJ, which the J stands for junior miners, gold miners being without the J, juniors with the J. And the juniors tend to give us a little bit more volatility without going for a 2 times or a 3 times type ETF. So we went for a little bit more volatility, and this thing's working just great. This green line, which is right here, basically at 35.05 triggered. We had a really nice follow through. We had a volatile second day, but still within our parameters, because our stop's basically going to be like pretty much right down about here. I don't know the exact level, but that's what we're looking for. And so as the market's been getting weak, GDX, the gold miners, have been kind of staying firm. And so on a day when everything was losing 1 or 2% across the board, GDXJ today was up 1.76%. But this is where we found it, and this was the type of entry we were looking for fear of trading in a market like the spiders, which at any given point could be susceptible to something like that. So that was the reasoning for doing that 2 weeks ago, and the same holds true with CF. Here's our big 20-day downward push, and this one little green day right here got us just barely above the 5-day moving average, which I'm using as my benchmark. We had a little decent gap up yesterday, and we've given some back today. But again, for the most part, this trade is going to be very similar to the other one. We are trying to do a safe, conservative entry on a pullback using other people's pain, and if it doesn't work, we're going to cut it quick. rather than going back to the old, let's try and buy something going to 52-week highs, because when they don't work, like I've said before, it's the stair step up and the elevator down, and we don't know if this is just going to be the beginning of something. So that was the theory and the reasoning behind both GDXJ and also the CF. We were looking for some oversold entries to try and avoid exactly what happened in the market today. Yes, David Schultz is giving Leon good props. Leon, as Barry calls him in the live trading room. Dusty calls him Leon, but so does Barry. I hear Barry call him Leon.
Yeah, okay.
You guys are in the live trading room. Yeah, Leon knows his stuff, and it was very nice of David to give you props there, Leon. All right, so that was the trade of the week. We covered 2 weeks with those, and again, the takeaway was we were not trying to find something that's going to all new highs. We're trying to find something just to stay alive, and if it doesn't work and the market falls out of bed, we got a really quick exit and a really quick out. So that is the trade of the week. Anything you want to add on those, Andy? Because you're an integral part of those as well on the weekends. We're together putting our heads together with Jamie and whoever else wants to.
Oh, absolutely. No, you covered them very well. I think, and good reasoning for taking those type of trades. I do not like, I've mentioned here before, when the market gets overextended this time, this is when I start looking for maybe what we sometimes call the junk, some of the stocks that have been beaten up, and the risk reward is much favorable. But no, you handle it very well there.
All right, so I'll just, since I see the request, a couple people are curious about this scan. There are no custom formulas in here. The 130, if you go to configure, it's now available to anybody. Just go to search, and it's 130. Change in the 130 period. So it's showing you it's a 15-minute candle using 130 periods, and that essentially is the formula for the 5-day moving average, which I've been using for years. But I finally got the development group to go ahead and add us that filter, so we can start trying to create some more cool stuff. All right,
and that is not a custom filter, right, Steve? That's already.
It's not a custom filter.
Okay.
That's why I just did that. You go to config, you go to search, you type in 130, and everybody's got it. It's now on the main server. Everybody's got that. So by sharing this, because somebody just inquired about sharing this oversold bounce, I will do this. Copy all. And what we'll do is we'll go to the trade, the toolbar here on GoToMeeting. Just click the little arrow to advance and open up the chat window. I'll title it Oversold Bounce so you can see what it is. And then I will Control-V paste the cloud formula in there for those that are interested. But again, I really just want to let you guys know we're trying to stay one step ahead of the market. We felt like it was getting a bit overbought and over, creeping out on a ledge, and that ledge and that branch on that tree was maybe getting close to snapping. And today I think it snapped. So for the last couple of weeks, I'm proud of our team for at least trying to find some different types of entries that are a little bit more safe than buying overbought stocks in an overbought market. I think I even tweeted that the other day. This is my new favorite scanner to find oversold stocks in overbought markets. So there it is. It was shared with you guys in the chat window. It's all yours. Now, let's talk a little bit more about some of the changing winds that could be happening. Andy made a great comment to me this morning on Instant Message. He goes, Steve, these bouncers just aren't working as well as they have been the last few days. And I agreed. I said, you know what, you're right. And the reason the reason that's important is because that's the market we have, where the dip buyers step in every time a level is broken and there's zero follow through to the shorts. The buyers step right in and just prop the price right back up, and that's basically what bouncers does. It just looks for a possible break in the prior day, and then as the stock trades back through the low of the prior day, we get the signal in bouncers. But I can tell you today that this thing did not do much at all. There's not a lot of good trades in here. Not a lot of good trades. And why is that, guys? Because the market. It's not all about the strategy. The backdrop of the market takes precedence over everything. That's the tide that we're trying to swim in. So let's do this. Let's say, bouncers has been working pretty well until as of late, and these are some of the things that we as traders need to do, is to start to recognize when things are not performing the way they have been or the way we expect them to. And last thing we want to do is fall in love. That's my strategy. I came up with that. That's the best strategy. I'm not changing my mind. I'm just going to keep on using it. Well, there's the ego and there's the emotions coming in. And that's what we got to try to avoid. So what can we do? Well, I want to show you something. For those of you that don't know, we have the really easy ability to duplicate any directional alert like bouncers, and just go into configure and hit flip, and all of a sudden everything is inverted that needs to be inverted, and all of a sudden you got a new strategy which is the opposite of this strategy. Well, let me close that because I don't have it named, but here it is. And today I've been calling it top reversal. So in a sense, it's the exact opposite of what bouncers does. It's trading above yesterday's highs and then just hitting an air pocket and falling back into the range. Let's take a look at a few of these this morning. And I've already marked these up with an orange line. How'd you like to be short right there? How'd you like to be short there? Or there? Or there? So what I'm seeing is a change in the winds of our strategies. That's 5 or 6 trades in a row that were just unbelievable. This one's a bit washy, but all we did was take the exact same strategy that was working in a bull market, flipped it upside down. Now we know going forward, if the sellers don't abate and the sellers actually get control and take control, then you start to hear the thing that says, well, sell the rips. Right now we're in buy the dip, right? Buy the dip, buy the dip. Well, when that changes, it becomes sell the rip. And what you get is you get these big green bars of people thinking euphoria is back, and then those green bars slowly start to get sold again. That's where the sellers are laying in wait to just hammer it back. Well, this could be just the perfect type of short strategy where a stock peaks up above yesterday's highs, just like it did here, and then just drops like a safe and space back into the range. So that's number one of the two that I want to share with you, because I know. So is it time to go short? I don't know, Carlin. My sermon today is to wait and see. Let's give it a few days. Let's let things set up. Let's see how things, go from here. But it's too early to make any statement that just proclaims now's the time to go short. Unless you've got a complete bias and that's what your book is, and you're hoping your book will grow by going short. But if you're unbiased and unemotional, let's give it a couple days. So I imagine some people are going to want this. If you have bouncers, you can do what I did, just flip it upside down. But if you want the top reversal, I'll go ahead and here, let me turn history off, go back to real time, and I will share this one with you. And this one was just on fire today. I'm pasting that right now into, actually let me label it first before I do that. Anything you wanted to add on that while I keep?
Well, while you're doing that, it seems like a few people are having issues. Guys, if you look, all of you should have a GoToWebinar panel, okay, basically kind of like your little control panel. And if you look down, toward probably the middle bottom, you're going to find a little section called chat, okay. It's probably was close to your questions at one time, and if you'll see he's dropping them in that chat window on your GoToWebinar panel.
Yeah, I can't show you because it doesn't show up on my screen. It's invisible, but it's there. It says chat, and just push that little marker. There's some people in here that don't have the ability to go short. They have a cash account or they have a self-directed IRA. Well, that's okay because there's this thing called SDS. If you guys feel like the market's going to be, going down for a while, you can participate on the buy side by just buying the opposite of the SPY. It's called the SPS, and you can see just by looking at it, it's the exact invert. So whenever I have people tell me, oh, Steve, I can't short, I've got a cash account, or I can't short, I've got a self-directed IRA, well, you can still participate in market weakness and feel good about it and make money about it by using SDSs. What's the one for the Qs? Is the SQQQ? Same thing. So these are called inverse ETFs. They're not doubles, they're not triples, but for those of you that didn't think about it, if you have that kind of account, you are able to buy these inverse ETFs and participate on the downside rather than feel like you can't participate. Okay, right. So top
And also,
reversal.
Steve, I'd like to add to that, you can, most of them will also allow you to buy options as well, so you can buy puts if you want to,
Okay, good
short,
point.
if you can't
Yeah,
short the common.
but some people are a little
I
intimidated
know.
by the options
Yes.
and all the different things that go around those. Um, okay, so the top reversal, this guy right here that I just spent time showing you 6 or 7 great short trades today, has been dropped in. The cloud, all you guys have got to do is once you click on that cloud, you can do it one of this way. It takes you to this page. You can copy this code here, the red code, or what I like to do is just double-click the URL, copy, and then you're ready to basically load from cloud. And it's right here. It's right there waiting for you. And I now I've got 2 copies. So that's basically the way you guys are going to want to approach the code that I dropped in there. All right, so staying in the same vein of what was working before, which is no longer working, the trend change lubricant factor, which we always seem to find something interesting to talk about every week. Look at it today. I think I may have had 2 or 3 at the most on here. Nothing. Nothing having to do with wanting to go up on a bullish strategy in this particular scan today. But as you guys recall, I did the same thing before. I flipped the trend change to create, ta-da, the inverse. And look at that. Oh boy, this was today and today alone. So if that doesn't tell you we're in a bit of a wind of change, at least for today, I don't know what does. This particular one is the exact opposite, and not without getting too much into it. Essentially, it's looking for stocks that have been in a nice uptrend for the year and a nice 52-week uptrend, but all of a sudden, on that 20-day range filter that we play with, these things are starting to roll over and get real close to a new 20-day low range. Now, the way I like to sort this, we could sort it by relative volume, we could sort it any way we want. But I like to sort by close from yesterday, because as we get down to these guys, if I open up my daily chart here and I start clicking on some of these ones down below, you're going to see these things are just off the chart. I mean, we would not probably try and establish a position after a candle like that. But towards the top up here, this one's only down, what is it, 1% or barely even that. So here's where we can start to see things of interest. Okay, there's some consolidation here. Might even make sense to set a price alert. And for those of you who are not familiar with price alerts, price alert will pop up. If it's set, it's going to pop up and it's going to show me which one just triggered. I'm going to check my notes. What do my notes say? Why did I like it? Why did I set it? What's the market doing? If this is a breakout high and the market's going to brand new lows, I'm probably just going to hit that minimize button and just forget about it. It's, again, my point is it's traders' discretion. What's the market doing? What's the sector doing? What's the stock doing? So on price alerts, this will be a great opportunity to kind of come through and set some interesting things. As a matter of fact, that could be interesting. I think, and here's another one right here. I would probably set this one. This is our old friend CWEI, which has been the poster child of short squeeze. Well, now it's starting to show a different tune. And this is what I really like, when it's bouncing along the line here, looking for the weak spot, looking for the crack in the ice. What I have right there is basically just an orange line, but I'm going to go ahead and throw in a short alert. The low of that candle is 27.61, so we'll go right-click, create a price alert. It knows it wants to go short. I'm going to adjust it to 27.61, and this is CWEI, time for a rest, question mark. So I'll look at the volume. If it triggers, I'll look and see what the market's doing, but these are the kind of setups we really like. They're bouncing, third, fourth, fifth, sixth time might be the charm, and the only way to know about it is to fire up your price alerts, because if you don't, I guarantee you're going to be looking somewhere else when this thing pops up and says, hey, this stock just went off CWEI. Do you want to short it? And then we decide what's going on. What's the market doing? So here's another one. Again, I can share this one with you. And before I do that, let me go back to live during market hours. All right. Is that the one I always want? Which one do we want? We want live always, right?
Live during market hours. That way it freezes for you during the day. Yep.
That will give us after pre and post market. So let me share this while I'm thinking about it. And then I'm going to show you something, because Andy and I actually were talking about it yesterday. A few interesting things popped up, so I could show you, what looked good yesterday, how it followed through today, just to kind of give you a visual trend change short. And I can't remember if I did it correctly, so I'll do it again. Save and share, copy. Now you guys can have
While
a
you're doing
copy.
that, Steve, while you're doing that, I will just tell them, yeah, because the market, some of the spiders, the IWM, I mean, the whole market was kind of in a precarious situation, and we always talk about chance favoring the prepared mind, and I was noticing a lot of these setups in the trend change lubricant going back yesterday. And I think what Steve's going to show you, we're going to go back in historical date, going back to yesterday afternoon, and look at some of these ones that closed in the inside and look at the opportunity that was there today. So what he's
Let's go
doing
back
now,
to
just going back.
yesterday. Going to go to my Pacific time, 12:55 is 3:55 Eastern. Click OK, and this is what we had to work with yesterday. All right. Rather than click through all of them, many of them, but well, here, look at this one. First one I clicked on, big red candle. This one follow through as well. More follow through there. Giant follow through. We even had that one marked up, it looks like. Because why do we have that marked up there, guys? Look left, prior support. This is the first time that I'm starting to see prior support when I look left getting taken out and followed through. What we're used to seeing is this take it out and bounce it back up. So it's only one day. One day does not a complete trend change make, but this is the kind of stuff that, Jesus, look at that, just blowing right through. So this is the same strategy that I just shared with you guys today, but we're looking at yesterday's setups. All of these were showing up at the close yesterday, and look at what they did today. This one is also pretty interesting, although that one's almost, that chart doesn't seem right. I'm going to have to investigate
No, that's
that.
that's like some sort of buyout or something.
Yeah. So, oh my gosh, look at that. So I mean, even if you came through here yesterday and marked up that level yesterday as the support, 52 down to 49. So this is the first time, guys, I'm starting to see this stuff work. Up until now, it's been one big fake out, and we talk about it, and we try and keep it top of mind that, hey guys, at some point this market's going to change. Be ready, and we're trying to give you guys as many tools as we possibly can to be prepared for when the time does change. So we'll go back to today on that one. All right. Well, we're running out of time. Let's take 3 chart requests. That's all we really got time for. So if somebody's sitting on a chart they want to take a look at, we got time to look at 3 of them. And the first 3 that come in, we'll go ahead and mark up SPHS. All right, there we go. We got 3, so curtain's closed. SPHS. Let's take a look. Well, I also want to always look at my single stock window. The stock's averaging 400,000. That's okay. I'm seeing just a lot of indecision going in a long direction. So if it were me, I would be very curious if this stock ever gets above that level. I'm not too familiar with this one. It's a biotech, so boy, when you're dealing with biotechs, this thing could go from 2 to 8, if they discover some great cure, or it could go from 2 to 20 cents overnight.
Yeah.
So just be aware. That's one of the rules we had, was never taking home biotechs. Nothing's really standing out other than this level. If you can get above that level, that could get interesting.
Yeah, it's right in the middle of a 6-month range. I mean, it's just not a whole lot there.
Interesting. CLVS, Clovis, again, another oncology stock, had a really nice move. It looks like it took out some nice highs, and now it's definitely pulling back with the market. I anticipated that we'd have some hard charts to look at today because of the way in which we broke. There's nothing that says this thing may not want to come back down to a level such as this. Let's see. Jorge, can I just do a flip? If the original, yeah, you can do the original trend change lubricant and do a flip. That's all you got to do. That's how I created it. So again, I don't know if we're going to find too many charts today where we say, oh, this looks like a great buy tomorrow. We're probably going to be a broken record and saying, let's just see how it sorts out. But if the price comes down to here, I'd set myself a pullback price alert, call it a pullback, and remind myself to watch the price action and see if a bidder steps up and see if the market actually starts to recover as well. Oh, JNUG, this could be interesting. Well, this is basically kind of a play on the gold and the GDXJ that we had, the Drexion Daily Junior Gold Bull. But this one I think's got a little bit more oomph in it. It might have a bit of double or triple ETF power. So Nothing that I said earlier about GDXJ that doesn't really pertain here. If the market continues to remain weak, I think there could be a flight to quality for some gold stocks. Obviously, I wouldn't want to see it trade much below this level down here. It's a lot of back and forth, not to mention it's a lot of volatile back and forth. These were 3 or 4 really volatile days. I think JDXJ was up almost 10.2% this day. That's just ridiculous for an ETF sector to be up that much. So, keep it tight. I also maybe keep an eye on this trend line. Was that what you were going to possibly say, Andy? These higher lows here.
Yeah, I would say, and you can start to get in these triple. These are very toxic. They're not meant to hold long term. You're gonna lose money long term
They're
because
day trading vehicles.
yeah, they really are.
They reset overnight.
They reset every day. Yeah, it's just they're very toxic. I mean, well, just look at it compared to gold. Pull up GLD and you'll see what I'm talking about. It's just look at that. Gold is not too far from its last month high, and this one is just still trying to get out of the
yeah.
And there's J now.
So it's intact. I personally would not want to see it break that trend line. And then the basic stop that we have in our trade of the week stop is way down here for the most part. Slab. Ooh, just took a big header down today. Basically, it just ran right smack into the supply level up here, it looks like, for the most part, just to mark that up. So again, a really nice trend line. You could probably go back and draw trend lines for days on this one. And if it pulls back to that trend line, maybe watch the action. I also see a lot of support here at the 65 level for the most part. But I hate to disappoint you. What we had today, everything just broke. Here's a perfect example of what I've been saying. Stair steps up, elevator down. So fear is stronger than greed. We got to let fear work itself out for a few days before we try and figure out, what's going on. Let's see. As somebody's asking about SQ. Oh, yeah, that one. That one we don't want to see get much more below. I think the official stop is right about here to try and give the gap a little bit of room. But if SQ is going to follow the market and head back into this gap, maybe a tighter stop, maybe more in order on that one. It just really is probably going to depend on what the bigger market's doing. We'll do one more TDOC, then we'll bring in Scott. TDOC short float is 39%. That's very interesting. It was up today as the market was down. Well, what you could have here is just a good old-fashioned short squeeze and people using the selling today to buy to get out and maybe cover. But this could be something that if you set a price alert just above today's high, and we do get a bounce back tomorrow, the only thing I like about this is the short float of almost 40% and a float of 37 million. So, I don't like the fact that it's spent 7 or 8 days getting to these levels. Typically, they're going to run out of steam. More than likely, what it might do is peek its head up above in the first hour and then pull back on you. So be very, very careful about that. I think, did we already do slab?
Yep.
We did slab. So, yeah, I think you own the shares at the 60s, so you're break even at down there where that support is, or even above it where the support at 65 is. So anyway, we got to call quits at some point, so we'll call it now. It's top of the hour. If you want to come back in, Scott, and explain a couple of ways for discounts for people kicking the tires, I'll be happy to put the slides back up for you, Scott.
Hey, thank you, Steve. Thanks, Andy. Yeah, a couple items. Steve already mentioned that we have that Brokerage Plus integration with Interactive Brokers. We also have a podcast. That podcast is easy to find. Just search for Trade Ideas Podcast in whatever application you prefer to listen to podcasts in, and it should show right up. Just subscribe to it. You get the new episodes every Friday. There was a great new episode this last Friday, and you should go ahead and listen to it. It featured Dan Merkin with Jamie Hodge and special guest Barry Anderson. So it was a really good about half hour of insight into running a fast-growing trading room like Barry has been running, and also, of course, what's been going on in the markets and what to look out for currently, how to capture alpha. Lots of good insight from 3 very experienced traders. Go ahead and search for Trade Ideas Podcast, and download the most recent episode and any others that interest you, and get the next one too on Friday. That's what happens when you subscribe to it. You get the new episodes automatically in your app. Also, there's a code, Holly All Week, all caps, like you see it on your screen, and you can also download a handout. There's a handout in your handouts panel. Click on the little arrow or plus next to where it says handouts, and you go to webinar interface, and there's a link there to download. That'll include this slide and some other ones with some helpful information and contact information, so you can keep this on your desktop and use it before it expires soon. Holly All Week is all caps, takes 15% off your first month or year of either standard or premium. And the great thing is both standard and premium come with a full hour of one-on-one training with one of our experts like Steve or Andy or Jamie, and it's a fantastic way to get started. So once you become a subscriber, do watch some of our videos. We've got quite a few getting started videos, a bunch of resources. Also come to the trading room. And then after you have kind of gathered some questions and figured out maybe what you want to learn the most about directly from one of our trainers, sign up for that training under support. Go to support section, click on training, and then pick the best time and date that's available to you with your preferred trainer or any of them. It's a fantastic way to get onboarded, and it's part of our concierge service. So again, Holly All Week saves you money. Go ahead and use that to subscribe. You can download this slide and some of the other ones from that handouts panel. When you have questions, just email them to us at info@trade-ideas.com. That's the best catch-all for support. It goes into our help desk software, and we route it to the appropriate team member that's going to be able to get you the correct answer as quickly as we can get it to you. You can also contact Steve or Andy directly by email. It's steve@ or andy@. And then also you can follow Steve at Today Trader on Twitter. Follow Dan Merkin at Trade Ideas 1, or Jamie Hodge is at QuantBot. We've got a couple others. And if you follow our page and like us on Facebook, we're Trade Ideas Pro on Facebook.com. You'll get some content we don't really place elsewhere, and then you can share it with your friends and get some more people into the Trade Ideas love. We've still got some room in this community. We want to grow it, and it's been growing very quickly the last 2 years. We love it, and we want to spread the word out there. So go ahead and share that stuff with your friends too, and call the 619 helpline number if you have a billing question during normal business hours. But again, the best place to send support questions is at info@ catch-all email for support. So today's recording will be up later on this evening, or at least by tomorrow morning, and we'll send you all an email about where to find that once it's up. So thanks, everyone. Thank you, Steve and Andy, for the presentation. Thanks to everyone who joined us.
Sound good. See you next time.
Yeah.
Thanks, everybody.
Later.